What is up, everyone? I am here, and I'm here with Boomer yet again. It's been a bit of a rocky last month in terms of the show being on every single week, but we'll try. We're gonna get into a rhythm here to get this thing just squeaky clean, is what they say, right? How you doing,
It's been a
Boomer?
slow news week, right? Like that's why
Yeah,
it's
very slow news week. Nothing
there's
very
just
eventful
nothing in the
happening.
news to talk about. Like,
Yeah, no, I don't want to. I don't want to joke about that stuff too much. I also don't want to get into the politics of all that and try and keep this show very market focused, but just off the top, war is unimaginably horrific in every sense of the word. And it's really sad to see a lot of the stuff that is coming out of Israel and Palestine. And there's a lot of, you can't really take any side. You can't be pro Israel, pro Palestine, anti both sides, pro both sides without getting some sort of backlash and alienating people. And so I'm not going to talk about sides or anything. All I know, and I think everything that we can agree on as human beings, is that war is truly, truly horrific. It's barbaric in every sense of the world, no matter where it happens, whether it's in the Middle East, whether it's in Ukraine and Russia, whether it's in Africa, or the coups in South America. It is something that I hope that we can get over. And the reason that I talk about Bitcoin so much is I think ultimately having sound money and grounding money in energy prevents wars from happening. That's kind of the reason that I'm really into it in the first place. And I imagine you agree with that, embracing sound money doesn't give people the unlimited, ammo dispenser to keep perpetual wars going. And I think having unsound money, one of the symptoms of that is wars that just go on forever and ever and ever. And as long as they're funded by the reserve currency, which is the US dollar, they will continue to go on forever. And there's a big profit incentive for politicians involved in it and for weapons manufacturers involved in it too. So less of that all over the place. Thank you. That's all I'll say on that.
yeah, I mean, I don't have my whole lot to add on that other than I know this has been a rough week for everybody. If you can't escape what we're seeing on social media and on TV. And obviously, if you're directly affected by some of the stuff that is going on in the world right now, my heart bleeds for you. But at least it's my hope that you can come in here, hang out with us for a little while, for an hour or so, and maybe we can talk about other things and maybe get your mind off of some of the negativity that's going on in the world, and we can talk about some positive things. Maybe learn a little bit along the way. So that's all I'm hoping.
Exactly. So thanks again so much always for tuning into these videos. I'm never going to be a perfect host, but we'll try and always offer value where I can bring it to the conversation. The first thing I want to talk about today is more stuff with CPI and the Fed. So I'll just share my screen here real quick. Oh, this is a cool chart. Why don't we do some charting stuff? I haven't talked about the charts for a while. I don't know. Do you do a lot of technical stuff, Boomer?
I was actually a trader when I was an equity trader back before the great financial crisis, and then throughout the financial crisis. I ended up leaving that position right at the end of the crisis. I just had enough of it. But yeah, we know a little bit.
So what's the standout chart for you this week? Have you paid attention? Do you still pay attention to any charts? Anything kind of stand out this week to you?
I play around on TradingView just for fun, just to take a look at areas of support and resistance. I don't go into the complicated stuff about moving averages and what have you, but I'm always looking to see what is a level that kind of makes sense, where it's like, okay, we're getting to a certain level and we're bouncing off it and going higher, or we're going up a little bit and then we're not able to go above that. So that's kind of what I've been looking at. We're fighting around that 25,000. It looks like we're holding, there's some sort of support at around 26,000.
Yeah, you're talking about Bitcoin. Yeah. For sure.
Are we supposed to be talking about other things? I guess the S&P 500 as well too, right?
Well, Bitcoin's chart has just been so boring that I don't even bother talking about it. I always have to keep zooming out because there's just no clarity on the daily. It's like, oh, we have positive crosses and negative crosses. Okay, so what does the weekly look like? Okay, that looks like a big head and shoulder, but it's not finished, so I don't care.
I generally look at three charts. I'll look at Bitcoin, I'll look at the S&P 500, and I look at the DXY, so the strength of the US dollar compared to all the other currencies.
So
I don't
so
know anything else.
you know what's one thing I realized yesterday? I don't know why it took me so long. We haven't set a new all-time high in markets in 2 years. That's like the
Mhm.
longest stretch of not doing that
We came
since the
awfully
financial
close, though.
crisis.
We came very, very close.
Mhm, mhm. But, you know, it gets pretty brutal if you again, like, you cut out the top 10 stocks. It's nowhere close to that
Yes.
recovery, and that's why, like, the S&P 500 is still way further away from the new all-time high than QQQ. Like, the triple Qs had a much bigger downturn in terms of percentage, but have recovered because of the, you know, the Magnificent Seven, but the S&P 500 has to deal with every other company, right? And so, not nearly as good of a recovery. It looks like we're almost at like the halfway mark between all-time high and the consolidation low here, which is it's good. It could make that new high, right? But not looking too positive. The chart I really wanted to highlight, and it kind of sets the stage for more conversations, is gold. Gold has
Yep.
had a really interesting week, and I don't
Yep.
know,
Look at
you know,
that.
everyone tries
Flying.
to do their own forecasting as to like why that is. This is the most significant move in gold that it's had on a daily basis, I believe, in the last 2 to 3 years. You don't see 3.2% up moves in gold almost ever. Um, and this is after, you know, a pretty long streak of, you know, had a pretty good breakdown here end of September. It's ripping back this week. You know, some people say it has to do with the war, projections on what inflation could be. What is your sort of sense on this? So do you think anything happened maybe today specifically for this move, a short squeeze or?
Could always be a short squeeze somewhere along the line. It could always be like a sovereign, like some country going out there and buying in big volume. That's always possible.
Mhm,
Um, Traditionally, gold has been a flight to safety, right? So when things are in the world are getting a little bit weird, people tend to sell off risk assets and buy gold.
mhm,
Um, Recently, like and you talked about it earlier, those Magnificent Seven stocks have kind of been the flight to safety. People have been buying up Apple, and people have been buying up Amazon and Facebook and Tesla. Um, Maybe this is just a kind of a rebound a little bit where people are being like,
yeah,
okay, I put enough of, I want to diversify a little bit. I've done a lot of that Apple trade where I'm now going to go into gold.
mhm.
That's
Yeah,
my
and I
my
think
first take on it.
yeah, I think there's a interesting component. I think one of the interesting parts for me today, I didn't trade or watch the charts too much today, is you have the QQQ, the triple Q's down quite a bit more than the S&P 500. You have a lot of the
Yeah,
smaller tech stocks down huge today. And then you have gold posting a record day and Bitcoin's right flat. Like
yeah,
the rhythm, the heartbeat
yeah,
has just been cut. It's almost like people trading that asset have no clue, you know, which correlation they should
yeah.
follow, gold or the market, right? So it'll be
It
interesting
could
to
be a
see. And then
Friday
you have all
thing.
these,
Have you
yeah, it
noticed
might be a
that? Like
Friday thing.
Fridays have been weird, like over the
Hmm.
past 6 months or so. Like where, especially Friday afternoons. Like there's often something strange kind of happens on a Friday afternoon.
I agree. Yeah. Um, but yeah, I mean, we'll see. And there's some good fundamental news coming down the pipeline. I heard that uh, until midnight tonight, the SEC has to file an appeal if they're going to appeal the grayscale
Yeah,
ruling. And if they don't, a lot of people think that that will de facto become an ETF. GBTC will turn into an ETF if they don't file an appeal on the judge's ruling from like a month ago. I think they can still file, you know, another random reason why they don't, you know, see it as viable. But that also just doesn't seem like the price of Bitcoin and the market doesn't seem to care about that much. But we'll see. Maybe there is some action at the end of the day for Bitcoin. But what I really want to get into is some of the pain that's starting to creep into certain industries because of these high interest rates, and we kind of like touch upon it every single week. But this really stood out to me this week. This is a letter from the Home Builders Association in America, basically asking the Fed. I'm trying to see, did they write this too? Yeah, dear Chairman Powell, they're getting frustrated with the lack of clarity as to the fiscal or the rate path for the U.S. And I guess that's the problem we all have with central banking as Bitcoiners. Like we want to be able to plan for our future, but we can't when we have a Fed that is reacting off of data that is lagging, or they can't really take control of. Maybe we shouldn't have a reactionary monetary policy. Maybe that's what the realtors and the National Association of Realtors should be thinking more about. But yeah, so in this letter, they're asking for no more rate hikes. They're saying that like the spread between the 10-year Treasury and the 30-year mortgages are, crazier than any other time in history. But specifically, one of the funnier, odder claims to me is that they're asking the Fed to not sell off any more of its mortgage-backed security holdings until and unless the housing finance market has stabilized.
Strange, right?
So
Strange
curious, what do
times.
you think of all that?
The first thing that came to mind when I saw that letter is that they made it public. Like I'm
Hmm.
sure lots of people have opinions about interest rates, and lots of industries are being negatively affected by interest rates. But this is like a group of people who got together to write this letter and made it public that they sent
Hmm.
that to the Federal Reserve. I found that odd. It kind of reminded me a little bit of provincial politicians this summer sending the Bank of Canada a letter in the same vein. It's like, please don't raise rates anymore. I find it odd. I'm not surprised by it, but I find it odd that they would make it as public as they did. It seems like more of a political stunt than really trying to get anything really accomplished. Everybody at the Federal Reserve knows that the mortgages are hurting right now.
Hmm. What I find interesting about this is I think we talked about this before, how like the mortgage markets in Canada and the US are so radically different. Basically, everyone
Incredibly
in
different.
Canada
Yes.
refinances every 5, 10 years,
Yes.
but the 30-year mortgage is the standard, right? And so in Canada, the brunt of higher interest rates, like the pain falls really heavily on the consumer because they have to adapt to these new
Yes.
mortgage rates and new
Yes.
monthly, prices for things. But in the US, like, and I don't want to say that the consumer is not going to hurt in the US, but you have to think these banks are holding 30-year term mortgages that got financed in 2021 that the principal value of have just been destroyed because
Just
of interest
destroyed.
rates. So you locked
Yes.
in 3% when
Yep.
rates are now at 5 and 6. They are praying by the skin of their teeth that these rates go back to 2 or 3 in the nearby future. Because if they don't, they're holding on to all this negative, like these massive losses in their portfolio. And it makes them basically unable to lend too, right? Like they have to follow certain standards and criteria. And I mean, these companies are like flush out of capital. It's really hard to get a mortgage now in the US. And a lot of these smaller banks that have been issuing them, like, I don't know how much longer they can hold out for. But,
Seems like
you know,
consolidation is going to happen in the banking sector, right? We saw it a little bit in the
mhm,
spring,
yeah,
but it seems like more of that is going to happen, where a lot of these
more to
smaller
come.
banks are going to get eaten up by the bigger players. But it raises the question: do these bigger players even want some of these banks? Like,
Well,
would
they,
you?
you know what they do. I mean, that was the whole First Republic deal. Is they scoop them up for pennies on the dollar because they are
Yeah,
taking on all those,
all this risk.
those terribly, depreciated mortgage-backed securities, and yeah, they have to like. There's no brand value in having a nice bank. Who cares about like the branches? Like, there's no equity in owning a bank really, um, except for the portfolio. So yeah, I think we will see more consolidation. The thing I always like to bring people's attention to is that it's really the earnings where these things get exposed,
Yes.
where that's where the market participants react the most. And so I'll try and maybe bring this up next week, but like just scouting maybe if I was more on top of it back in March, and there were a few people that were, you could have seen that, okay, what were the banks holding the long duration treasuries the most? And there were charts out there that showed that and how much of a percentage of their portfolio it was. And so if you had that chart handy and you were a little bit savvy, you would know that come earnings time, you would see all the reports of massive drop offs. And you might have been able to call something like SVB. And so that's kind of leveled off with this whole like lending facility from the Fed that they implemented. But I think there's a whole new class of probably regional banks that are up to the gills in mortgages that have lost tons and tons of value, that aren't getting more loans out the door. Small business loan applications have dropped off a rock in the last few months. So I think those are next. We've been saying that, like, commercial real estate's next on the chopping block, but yeah, it'll be interesting to kind of, I guess, scout and find where that weakness is.
Yep,
And
money is becoming more
what happens next.
expensive, and it's also becoming harder to get. So
Yeah.
I think we're quick to take a look at interest rates and to say, like, oh, the interest rate is 7% right now, 5%, whatever it is. But that's if you can get it. And I think what we're seeing a lot more and more and more is these institutions are unwilling to give debt, because it's just they have too much risk on their balance sheet already.
Yeah. Don't
Off
need
the top of
any
your
more,
head, and I don't know this. This is not really an area of finance economics that I really do I don't really follow this that closely, but the ratio of fixed rate mortgages to variable in Canada, what is it? Is it like 30% variable, 70% fixed?
I'm not sure.
I'm not sure either.
Blows
Anybody in the
my
chat
mind.
know?
It's like a hindsight thing, but it's like, it blows my mind that anybody was taking out variable mortgages when the rates were at 0%. Like, was the guess that, oh, they're going to go below zero, or was the guess that, I get to save like a little bit here? It's sad. It's sad that anybody would take a variable rate mortgage when the rates were at zero, really.
And what about the US? The US have that ability. Are there variable rate mortgages in the US? Like, I do know what I do know about mortgages in the United States is that they don't have to be re-upped every 5 years. You can sign into a 30-year mortgage and you're set into that rate for the duration of your mortgage.
But I think they do. I think they do have them in the US, and I imagine that they will be growing in popularity as they're probably, looking at the curve and seeing that, oh, I can get a cheaper rate if I go variable, and rates have to fall. So I imagine, I don't have the chart on hand, but I imagine that variable rates in the US have probably seen an uptick in demand, if anything, versus fixed.
But I would assume. I don't know. I was saying I would assume so, but I don't know. Yeah. I don't know. There's a lot of talk that rates can go even higher.
If someone wants to bring up a link in the chat, or like a note in the chat about it, I'd love that. But I don't know where I would fetch that offhand. Diving into some of the CPI numbers, inflation, lots of numbers here. We'll get over the numbers soon. CPI rose a little bit. Actually, no, it's kind of leveled off at about 3.7% in the US. The core CPI, which is everything except for energy and food, which I guess is not important for some people who don't use energy or food. It's up 4.1%, which is bad, because I feel like core CPI is the one that usually is always like a second derivative to regular CPI. It's usually always lower because it's not including volatile energy and all that, but it's higher now than regular CPI, and it's a little bit higher than expected as well. What are your takes on this? I think the big contributor in the last month was oil, right?
Yeah, base effect as well, right? Like, there was a lot of base effect where you're comparing year over year numbers. So if there was like a strange print 12 months ago, that's going to be reflected in this month's print. So we were expecting to see a pretty big increase in energy over these next few months, just because of what energy was like 12 months ago. Energy was quite cheap. It was still relatively expensive, but we're seeing the big increase now. The increase is now compared to what it was a month ago. Man, like, I know it's in the notes, and maybe we'll talk about it, but it just seems like, how many people really understand that when they say that CPI is leveling off, that doesn't mean that prices are leveling off. That means that the rate of increase of prices is leveling off. So it's things are not getting more expensive faster. They're getting more expensive at the same rate as they were last month. Are you really noticing that? Like, that? Are people starting to clue into that?
Well, I think the regular person doesn't look at the data really, and factor life decisions around it. What I know is,
if they're not looking at the data, they're at least hearing the headline. They're hearing the headline: inflation has cooled off. Like, how many how many people out there actually feel that inflation is cooling off? And like, to the average person, when they say inflation is cooling off, I think they're expecting, oh, that means prices are coming down.
Mm.
I
Well,
got,
it's tough, right? Because like in some sense, you do see that with gas prices. Like I noticed, I mean, in BC, they passed something in California and gas prices dropped 20 cents overnight. So when I see that, my brain's like, oh, prices of
yeah,
things are going down, right? I mean, it's impossible. Like if you look at the gas prices every time you leave your house, you do see them going up, but you do internalize when they do drop a little bit, right?
yeah,
Because like 20 cents overnight, that's like a 10% drop. So you do think deflation, it's a big part of your budget, maybe not, it depends. Um, and then, you see things go on sale and maybe subtly you think, oh, okay, inflation's leveling off, right? But you're totally right. Like the rate of change is still going up. It's just, like the marginal cost of everything just continues to go up as long as the inflation number is positive, right?
yes. And these are big
The thing that
numbers.
everyone, you know what is really tragic in all of this? And Kevin O'Leary, I don't like the guy. I think he's a big scammer. But he makes a really good point is that small businesses don't have any of the pricing power that comes from inflation. Prices of everything go up 9%. The small businesses cannot raise their prices 9%. They cannot raise the wages that they pay their employees 9%. It is an existential death to their business a lot of the
Yes.
time because they are barely scraping by. And I see all these, conversations and arguments about, oh, we got to raise the minimum wage. If you're Amazon, you're already way above the minimum wage. If you're Walmart, you're way above the minimum wage. Like all these companies, they were able to absorb it easily. Why? Because they have a set base of consumers that are going to be loyal to that brand basically forever. Yeah, they spend some money on marketing. Yeah, Walmart and Amazon compete a little bit, but the margins are basically like they're fixed. Like the American consumer is not changing preferences to where they shop. And in fact, as things get more expensive, the cheaper brands become more appealing to people, right?
Yes.
So Amazon and Walmart do well. They do well in, a good economy. They do well in a bad economy. The losers are the people who are creating stuff domestically, and the losers are the small businesses. And so, you say, okay, we're going to raise minimum wages in the state. We're going to do the big jump from 13 to 15. That small business is making barely anything. And now the only way that they're going to be able to maintain the same margin is by jacking up the cost of their goods by 15, 20%. And so it's like every time I hear the progressive left talk about minimum wage and fair wage and people paying their fair share, it's always as if small businesses don't exist to them. It's almost as if nobody who advocates for any of that stuff has ever run a business in their life. And it's infuriating to hear them say, like, it's not that hard. Just pay your fair share. Just pay a living wage. It's just, it pisses me
Yeah.
off. That's all I know.
Yeah. Yeah. I mean,
And it's
with
it's
minimum wage.
devastating because what they'll say is like they'll see a mom and pop business go out of business and they'll say, oh, it's because Walmart priced them out. It's just like a little bit, but also passing these arbitrary laws about what wages should be when you can raise the minimum wage, it's still not going to be a living wage. It disproportionately affects small businesses, and there's just
Absolutely.
no consideration or empathy for that. It just kills me. So yeah.
Well, it's just one other input cost that's going out of control, right? It's just one other
Mhm.
input cost. Their rents are going up. Their supply, whatever they're doing as a small business, you have to buy things in. If it's a restaurant, you have to
Mhm.
buy, ingredients. If it's a shop, you have to buy your product in order to sell it. The
Mhm.
prices of inputs are rising across the board,
And
and
they can
labor is
borrow from the public markets where small businesses can't.
they can
The
borrow.
bigger you are, the more preferred rate you get to do
Absolutely,
everything. And it gives you that leg
absolutely.
room. And no one understands that we have like that is what fiat is all about. It's about
Even
giving
pricing
preferred rate.
power on real things like real estate.
Yeah.
If
Yeah.
you're a Walmart, maybe not Walmart, maybe not a great example. If you're a Starbucks, you have a lot more
Mhm.
pricing power on that real estate than you would if you're like a David's Tea. Like I know they're out of business now, but like maybe that's a good reason. That's a good
Are they out of
example.
business, David's
I
Tea?
think so. Yeah, I think they went. I
Oh,
think they
Rick.
went bankrupt a couple of years ago, right at the beginning of the
Yeah.
pandemic, if I'm not mistaken. Uh, as a Starbucks, you can go to the real estate, the mall or the real estate company that rents out these locations, and you can ask for better rates on real estate because you have that brand recognition that's going to bring
Mhm.
customers into that building or into your mall or onto that street, where the
Yeah.
small business don't have that type of pricing power.
Yeah.
Now, with
And if you
rising
know anything
minimum
about
wage,
marketing, all this stuff is experimentation. Like there's so much lost money like that happens in building a brand, right? And Starbucks went through this. They've
takes
had
time.
50, 60, 70 years of
Yeah,
experimentation to build that brand up, right? But yeah, when you're a small business, like
you don't
there's
have
no
that
level
power.
playing field in the
No, there is
fiat
not.
system. It always disproportionately helps monopolies, and it's messed up. And you wouldn't have
And
that
on
under a Bitcoin
wages, if
system.
when
You
you
don't
raise a
have those
minimum when
preferred
you raise
rates.
a minimum when you raise minimum wage, if you're a small business, what do small businesses tend to do? I would believe that there would be more of a propensity to now hire two people part-time, right?
Mhm.
And lower the amount of hours, right? You're going to lower the hours. Maybe instead of having two people working at the same time, you're only going to have one person working at the same time,
Mhm.
or you're going to cut the hours of your store to bring your costs in line.
And that's not even getting into benefits, right? I mean, if you're a
Benefits and
big
everything.
multinational chain, you get massive deals and you can offer everyone healthcare. And so small businesses can't compete. They don't have that pricing power. And so small businesses, like they're gonna offer what they offer, and everyone says, "Oh, these
Yep.
guys are shit. They're treating their employees like crap or whatever," not realizing that they have absolutely a complete disadvantage to the massive corporations. And as a worker, I would feel that way too. Like if I couldn't have my own business, I couldn't do what I do on YouTube or whatever, I would probably work for a big company. That's how you secure a good living if you can't
Yes.
make it your own way. I would
Yes.
not want to work for a small company where I'm not able to get equity and I'm just like, a wage earner for this company that might not even be here 2 years from now. Of course, I'm gonna want to work at an Amazon or a Google or something like that, right? So yeah, it's infuriating. That's all.
And consumer behavior, right? Like if you ask the average
Mhm.
person, do you support small businesses? Most people are going to say yes, of course, yeah, I support small business. But then you start asking them, well, where do you do your groceries? Or where did you
Yeah.
buy this? How much do you do this? Like, how often do you shop at Amazon versus the shop down the street?
Mhm.
Most
That
people,
that's what I like about, like, it's a really a North American thing, and I think it's becoming a Chinese thing too, where, like, in Europe and South America, there are big corporations that have monopolies, but people are not, like, LARPing when they say they support small businesses, right? You go down to South America, yeah, they have Costcos, and they have a couple Walmarts, and they have, big
yeah,
grocery chains, but that is not where people do their shopping. Go into any, like, you go to the market and you buy from your neighbor, and it's a better price because in those markets they're able to actually compete as well, because all these multinationals are importing and the import costs are not subsidized by the government like they are here, right? Or they're not covered in tariffs or other exceptions, right, that we're trying to mess with on the free market. It's cheaper to have your stuff grown locally, right, in a lot of places. So yeah.
I'm not going to argue with you, but the trend is definitely going to consolidation and more big
Yeah.
businesses, though. I would
Oh,
say
for sure.
most places in the world, and I'm sure there's
Mhm.
cultural aspects to this as well.
Yeah.
I spent a lot of time in Asia, and the markets were a part of the culture. Like the lady that's been selling stuff on the street, vegetables on the street, and she's been at that exact same spot for 20 years. Well, she's kind of
Mhm.
ingrained as a part of the culture, right? Like it's like, oh, that's where I buy my strawberries. Is from this lady who's been there forever. Um,
Mhm. Yeah,
that's going
exactly.
away, though. That seems to
It
be going away.
is. It's
I
going away
hope it
here.
comes
It's almost
back.
gone here. I hope it lasts a little bit longer in South America specifically. I think part of the reason it sticks a little bit more in South America is because I think the idea and the value of the family unit is a lot stronger there
Yeah,
than it is here. And I think that spills over into, helping and supporting your community as well. Um, I want to jump into some other real quick little observations, headlines, and then we'll kind of move on.
yeah.
But really quick, word from our sponsor, Beaver Bitcoin. They're the easiest place to dollar cost average straight from your bank into a cold wallet. They support my show. I even have a one of one T-shirt from them. They don't do merch, but I made my own. So yeah, go check them out, and also follow them on social media because I'm doing trivia now with Bitcoiners, and you can catch me there doing 1 minute lightning trivia. This week's show is brought to you by Beaver Bitcoin. Dollar cost averaging is the most stress-free method to enter the Bitcoin space. And if you're looking for a simplified way of buying Bitcoin in Canada without needing to rely on a custodial exchange, Beaver Bitcoin is your best bet. Beaver Bitcoin lets you set up recurring Bitcoin purchases directly from your Canadian bank account and straight into a Bitcoin address that you control. It's like a savings account in a currency that you actually want, or a Netflix subscription that doesn't suck. And if you don't want to wait to stack sats, Beaver Bitcoin supports instant non-custodial Bitcoin buying via e-transfer as well. Give it a shot today at beaverbitcoin.com. All right, cool. Okay, a couple quick observations. Do you remember when oil was really, really high? It was about like 120 a barrel. I think it was sometime last year when the war in Ukraine kind of started breaking out.
Yeah, didn't last long.
And yeah, and they just started dumping reserves out of the Strategic Petroleum Reserve to try and keep gas prices reasonable in the States. And then they came out and they were saying, what was the statement? They were saying the Department of Energy announced in October of 2022 it would prefer to buy crude oil to refill the SPR at a range of 67 to 72 a barrel. So they actually did one part of that right. They sold, or they emptied their reserves at the high so that they could kind of refill them at a bit of a lower price, right? That's kind of the point of the SPRs. It's like a little bit of a backup to stabilize oil prices, right? Okay, so we go to crude oil futures. We got a solid February of this year to about July, maybe June of this year. So you had a good 4 months to basically scoop up oil between $67 a barrel to about $75 a barrel. And I don't know about you. Oh, sorry, none of those charts were showing. So anyway, this is the price of oil here real quick. So yeah, you can see it was in that range that they wanted, between 67 to 72. And then when we actually look at the SPR, they've actually only been emptying it despite all that, and no refills to kind of hear of. So I mean, that's pretty wild. That just goes to show you like what the leadership is, to put that number publicly out there and say, yeah, we would look to refill it, and then not barely an ounce of barrels added back to the SPR. I think maybe 3,000 barrels added in the last 2 months.
I've got like conflicting opinions on this. Like I'm not so sure. Okay. I think you're oversimplifying this. I think the Strategic Oil Reserve is a very complicated thing, and I think there were a lot of factors involved. And it's very easy to look at the obvious things. The U.S. started pulling oil out of their reserve right around midterm election time. And it was very easy to say, it's like, oh, look at Joe Biden and the administration are doing this to reduce the price of oil, to gain favor for votes in the U.S. And that's rational. That's a rational, logical thing. And I may or may not believe that. But I think there's a lot more at play here. I think the United States were concerned with what would happen if the price of oil went any higher. And when I mean concerned, I mean like economies collapsing all over the world. Mm-hmm. By releasing the reserve is something that they can do to increase supply very quickly. Oil's a pain in the ass. Like it's hard to get oil to market if you're not set up already. It takes time. There's a lot of bureaucracy. There's a lot of, it's physics, right? Like it's actual physics to refine this stuff, to get this out of the ground. Like it physically takes time. But by just tapping the reserve, you're able to, I hate the word manipulate, but you are able to manipulate the price and bring some downward pressure on the price of oil. And I really think that that's what the U.S. did last year. I'm with you. I think that right now, if they could, they would replenish the reserve. They would. They would. But I think that they're concerned about taking that much oil off the global market right now. I think they're concerned that if they start filling that reserve back up again, you're going to get a spike in oil again. And I don't want to get into the geopolitics stuff too much, but with what's going on right now, the last thing that the U.S. wants to do is to cause major problems in the oil market. So time will tell. I think this SPR thing, I think it's very nuanced. And I think it's
Mhm.
it's very easy to just look at the headline and kind of follow that. But I think there's a lot of balls in the air here that they're juggling.
Mhm. It's so what you're basically saying, it's probably easier for them to offload oil when they need it than to become a buyer of it, because it just sends like a very clear signal to the market. Oh,
Exactly.
we're rebuying the oil. All this stuff
And
is
what
publicly
does that
documented.
what will that do to price?
Exactly. Yeah.
And
It's all sentiment, right?
yeah,
But I mean, yeah, I guess there's no real. I mean, if you really look at this chart, I mean that was the baffling thing about the way that they handled this, is that just if you could measure the volatility of this SPR chart that goes back to the 80s, whether
yeah.
it's increasing the amount that you add, whether it's decreasing it, this radical decrease of about almost 250,000 barrels here happened in
But there's a lot of
less than
factors at
8
play here
months.
in this chart. Like the SPR is
Yeah.
like this thing that we could talk about this. Like honestly, we could have an entire show to talk about this.
Yeah.
The SPR is also used so that the United States has some sort of buffer for oil that they're importing. Now, since
Mhm.
the beginning of that chart that you showed, 1980s or whatever, the United States capacity to produce oil has dramatically increased. So you
Mhm.
can make the argument that now, because the United States are able to produce their own oil, they need less foreign oil.
Mhm.
So you can make the argument like, well, maybe they were over capacity when the SPR was full, right? So
So they so
maybe
they
they were holding on to it, waiting. Okay, well, waiting for inflation to get kind of out of control. When we see inflation at a certain number that's a little bit too high for us, we'll be able
Mhm.
to bring it down.
Mhm. But I mean, you don't think it's kind of a bit of a different strategy here versus the policy of dealing with this, to kind of unload it in one clip like that? Like they almost drained half of their reserve in about a year. That was spent that took them years to accumulate, right? And as you said, like it's not so easy to come back into the market and start loading this up. And
Yes.
now it's at the lowest level since the 80s. So maybe that doesn't matter. Maybe the whole, all the fear headlines like, oh, SPR lowest level since the 80s, maybe that doesn't matter because they can just turn on, refining and drilling capacity when they need to. Is that kind of what you're getting at?
I'm saying that's possible.
Mhm.
I'm not sitting here saying that that's my opinion one way or another, but I'm just saying that that's a nuanced view that I don't
Okay.
see a lot of people talking about out there. It's come out a couple of times on Twitter. I would recommend anybody follow Anan Alalji, I think his name is. He's an energy analyst. Let me get his name exactly. He has yes, Anas Alhalji. He's an energy economist, and
How
he
do you
has like
spell
a
it? I'll put it up
pretty
on the screen here so people can find it. A-N.
Anas is his first name, and his last name is
J-J-I.
Alhajji.
All right. Cool.
There we go.
I'll take a look at his page after. That
Take a
sounds,
look. He's worth a follow. He's a
yeah.
great follow if you're interested in energy economics and anything related to oil, but not even just oil. Like he's really on top of it when it comes to all the energy markets. And
Mhm.
he's
Cool.
been kind of talking about this thing about like, okay, well, depleting the volumes of the SPR was a way to suppress global price for oil at a time when they probably needed it, not just in the United States.
Mhm. Speaking of oil and energy and things that we can't live without, well, first of all, my take on this, and I don't know if you share it, is that I still think, and Kathy Wood really supports this view. I think that demand for oil is going to drop pretty dramatically, and it's the same argument that like Jeff Booth makes, and maybe it doesn't apply under a fiat system, but I think it does to an extent that everything trends towards the marginal cost of production,
Mhm.
and the innovations in fracking, and it's just the will is just not there in the US politically to extract more oil, and some other places around the world because of the climate agenda stuff. But I think a single breath or wave of populism can flip that on its head pretty quickly. And so, I don't trade, I don't own oil, I don't have skin in the game. There's obviously discrepancies between the price of oil and then what you pay at the pump. But when I look at like a barrel of oil and extracting the raw resource, I see it only getting cheaper over time. I see the demand grow in times of conflict and war because you can't really replace it with anything. But ultimately, like 50% of the demand is still transportation, and we are rapidly, rapidly moving away from fossil fuel powered transportation. So I
Not sure if I
see a
agree with you.
massive future, but
Not sure if I agree. I mean, we might be in the
no.
West, like sure, but take a look at Africa, take a look at like South America, take a look at
No,
Asia,
for sure. But
India. Just
electric,
India, just the oil demand in India. I don't know. I think
the
gas is a
electric
little bit different.
drivetrains and the power generation is another thing. So it really depends on how expensive your electricity sources are. The electric
Exactly.
powertrains are getting made so much cheaper now. And like they're going through this massive deflationary wave. You can take the subsidies out of it. Like the amount it costs to produce like a solid electric drivetrain now is
Yeah,
it's
but there's
just
other
keeps getting cut
factors
in
as well
half.
play, like infrastructure, like charging
Hmm.
infrastructure.
Hmm.
Okay, congratulations. You have a country, let's say India. Let's just use India as an example.
Yeah.
Like we have a bunch of electric vehicles in India. Great. What's the charging infrastructure look like? Like, are they able to produce enough electricity to pump out to propel those EVs forward? Not so sure about that.
So my retort to that would be, at least India and China are working on their Gen 4 nuclear reactors.
There we go.
So I
Yeah,
think
see.
if we jump forward into time, they're going to have cheaper electricity than we are, from that innovation. Maybe 20, 30 years, right?
I see someone in the chat right now who may or may not be an expert on nuclear energy. I'm not sure if it's the same guy, but like
Ryan might know.
Yeah, Ryan might know. If it's the same Ryan, I think it is though.
I think it is. I think it is.
And I agree.
You let me
Yes.
know what you, Ryan. Let us know what you think, because I think, just from what I read, maybe I'm just absorbing headlines. I think we're going to be leapfrogged pretty hard in nuclear energy generation really quick unless we get the political will to start doing something about it in North America. Canada is a little bit ahead of the game.
It's not just electric generation; it's also infrastructure.
Yeah.
So I'm with you. Again, going back to India, it's like great. Like let's say India open a bunch of nuclear reactors. Awesome, great. Do they have the capacity to get that energy where it needs to be to charge all these EVs?
What does that take? That takes a couple raw resources to build the lines out, but it takes labor, and India has a lot of labor now to do that.
I don't know. I'm more.
You don't think so?
I don't know if I'm not necessarily pessimistic. I mean, I'm optimistic on India, on India, and I'm optimistic on nuclear energy. I'm just a lot more. I think we're going to be dealing with oil for a lot longer than maybe Kathy Wood thinks.
I think so too. I just think, I don't know. We'll see. This is the problem with oil, is like it gets so affected by foreign conflicts and catalysts like that, and can be propped up a lot longer than we think. So,
yeah, he's cool. In the chat. We're talking about SMR charging stations, like small modular reactor charging stations.
Yeah.
Like yes, I that's the future for sure. Is these smaller nuclear generation that you can kind of put in every neighborhood. Sure, I think that's awesome, but I don't think you're just going to snap your fingers and all of a sudden you have nuclear generation all over the place.
No, I agree,
and you have infrastructure to get that energy everywhere it needs to be. The thing is with oil, as long as you have a gas station, you can do it, right? Like rural communities or mountainous communities. I don't know. I think it will be dealing with oil for a long time to come. Unless like something.
I think really what matters is like population centers and where you see that stuff. And so you have to break it down region by region. Oh, I don't think oil is ever going to stop being used. I'm just looking at the demand for fossil fuels, and maybe I got to dive into the charts a little bit longer, but I want to look into the demand for fossil fuels over the last just 20 years and see what that picture is. Did we hit, have we started to, it's like what we say about inflation, like the rate of change. What has the rate of change been for demand of oil, especially with a declining population, especially with more competitive energy sources?
But
maybe
are we then
matter,
not maybe
OPEC and
we're
all
gonna
that supply stuff gets,
but we could find other things to use that oil, right? Other uses for that oil. Like Dave Bradley's in the chat that like oil is the single most useful thing humans produce. Like like we might be using it for other things.
Half of all of it is still in transportation. So I don't know. Well, we can go off on this. I'm not, you know what? I'm not super enough informed to have a really great debate on it. I'm talking a lot about from feeling. But I just see, the supply side is the variable where I can't really predict, because this is all like, made up from
There's so
bureaucratic
much
decision
supply
making
side.
as to how much they drill for it, right?
Exactly. We don't know. We don't even know how much oil there is.
Yeah, we have
We
no
don't
idea.
know. We don't really know.
But my guess is a lot more than we think. So
I agree with that.
yeah.
15, 20 years ago, no one would have thought that the United States would become the world's largest energy producer. Like that
Yeah.
would have been insane to say that. But
Mm-hmm.
fracking made that possible. So who's to say what can happen next?
All right, we'll move on from this. It's a great conversation, but man, I had so many other things I wanted to get onto. One of the big ones was oh yeah, great hopium chart, by the way. I'll share this. It'll segue into our next conversation. This is year to date 2023 asset class returns. This chart's probably too small for most people to see, but at the very top of this chart, at 63% year to date returns is Bitcoin. At the absolute bottom is bonds, long-term treasuries.
Where are NFTs?
Negative 8.3%. They are below everything on this chart. So wherever my mouse is going right now, think like 10 feet deeper.
What about BTC trading cards?
BTC
trading cards on
have
there?
gone nuts. BTC trading cards have gone nuts. But yeah, this is what I wanted to talk about. So I had the opportunity to go down to Pacific Bitcoin and have another one of these great Bitcoin conferences. Biggest one I've been to since the Miami conference, which was actually no, that wasn't my first conference, was it? It's my second conference. But anyways, probably one of the bigger Bitcoin conferences there was. And I have a couple takeaways I'd love to share. But number one is that I saw this stat posted the other day, and it was about Thunder Games, which I believe I've mentioned once or twice on the show, maybe a long time ago. Thunder Games makes these kind of just like little addictive mobile games. There's like Solitaire, there's like a sort of a Tetris clone, a little Infinite Racer. But the catch is that when you play these games, you get tickets, and the tickets enter you into a draw for you to get a couple sats, maybe 10 sats, maybe a couple thousand. So it's just, you can play games, make a little tiny bit of Bitcoin on the side. And they have had massive user growth, because they're not pitching this as like a Bitcoin gaming product. They're just making games that they feel are addictive. And then there's that added bonus of you get a couple sats. And so this stat just came out that 80% of the people that have downloaded a Thunder game have never used Bitcoin before. And because of the Thunder games, they've probably gone to install Lightning wallets. That's the only way to claim your Bitcoin. They don't hold the Bitcoin on your behalf there. You have to withdraw it within like 3 days or you lose it. And so they've been a big driver towards Lightning wallet adoption. And apparently now 3% of all Lightning growth this year is due to Thunder Games. And in the last 2 years, Lightning wallet addresses usage has gone up 1,200%, which I just think is amazing, because this is something that Bitcoiners talk about. Oh, Lightning, layer 2 scaling. And we're looking for the killer apps, because Lightning is really where Bitcoin can become the internet of money. We can use it for all sorts of transactions. There was Noster. That's become a killer app for Lightning too. But you're seeing this now with gaming. And going past that is, I've just started to notice all of these different elements of culture and products and just really cool things being built on the Bitcoin social layer on top of the technical layer. And so a couple shout outs, like Bitcoin trading cards, who I'm going to be doing some stuff with. Amazing story there. And I'm actually going to be live on Bitcoin Sessions, BTC Sessions channel about an hour from now, talking with the founder on our why are we bullish thing. But if you don't have any Bitcoin trading cards, go get them. They're so cool. I never expected, I heard of the company and I thought, well, this is kind of cool, but I'm into trading cards if they're like Pokemon, but I like there to be a game or whatnot. But when you see these cards in person, they're so cool. They're just monuments to everything that we've created up into this point in the Bitcoin world. And they're amazing.
So exciting to see these things being built, right?
It's
like
so
just stuff
cool.
like who would have thought that was not on Satoshi's radar? I think when he was writing the white paper, I don't think Satoshi was thinking about trading cards. But yeah, why not? And it's great. And there's a ton of these businesses popping up. Like you mentioned Thunder Games. Zebedee is another one, right? Zebedee are also another gaming platform. Fountain is another one, like something I use all the time. Like I'm a big fan of Fountain, streaming sats to content creators and getting sats for listening to podcasts. People like I'm sure you know Corey. Corey was at the conference at the Pacific Bitcoin, selling his Bitcoin baseball sweaters.
Oh, dude, I have one. I'm wearing it for a video or two.
Yeah, like it's just so exciting to see people building, like, yes, building
You
on
want to see
Bitcoin,
two
that's
more?
awesome, but also building on Bitcoin's brand. So there's
Okay,
building
so
on Bitcoin like lightning, and then there's building on the Bitcoin brand. It's fantastic.
Exactly. And the social layer, right? Because Bitcoiners care. And
Yes.
I asked the stream, and I'll check what the results are really quick here. But I asked the stream, like, okay, if you are into Bitcoin, how many Bitcoin products do you own? Is it 0? Is it 1, 2? Let me just check the chat. So let's see here. So 29% of people don't own any physical Bitcoin related products. Go do that. At least get a book. A book is included in there.
Get a book. Yeah.
1 to 5 is about 14%, and then 5 to 10 another 29%, and then 10 plus another 29%. So
I gotta be over 10.
But
like, I gotta be over
60%
10.
of people watching this show have more than 5 Bitcoin things in their life or in their home, which I think is awesome. And I think that's only going to grow. And I never really understood how big of a market that could be, because I thought, I don't know how many serious Bitcoin, maxis or Bitcoin people that use it as their identity there are. Turns out there are thousands upon thousands. And in the depths of this bear market, in this $500 billion market cap, in the midst of, 94% of the Bitcoin not moving in the last 3 months, there are some people dedicated to the cause on like a cultural and like a spiritual level. And it's giving life to all these cool entrepreneurial ideas. Another one I want to share, I met with the founder, is they're making Bitcoin energy drinks. Sovereign is making Bitcoin energy drinks. So they're like Monster, they're like Prime, but I tried one. I actually thought it was a lot better. It's not bitter. It's not overly sweet. No sugar in it. Tastes like orange creamsicle, called the Orange Pill energy drink. But get this, they could have just made a random energy drink, put Bitcoin on it, put a Bitcoin fact, and then left it. But these guys, what they've done is they have used light sats, I think it's called, so that once you peel back the Sovereign, the foil or whatever, there's a QR code you can scan, and you can actually redeem sats. So every can has Bitcoin on it, and anywhere between, I think it's like 500 sats to 1,000,000 sats that you can get from this. And I thought, like, wow, that's such a cool idea. And it's just a matter of time before they get this to a distributor and it starts, popping up in stores. But like, that's something just unique to Bitcoin. You couldn't ever create a product where you could just instantly redeem hard money without going through a whole bunch of legalese loopholes. But now you can give away cans and have people just redeem real Bitcoin on the Lightning Network in a second and do this.
It's so exciting to see this stuff, right? Did you talk to
1,000 cans?
Did you talk to Panties for Bitcoin as well? Like, did you?
Oh yeah, those guys are awesome. I bought their
great
boxers. I don't know how I'm gonna show them off in a video. I'm not that in shape yet, but yeah, they just launched their mail line, which is really cool.
Yeah, it's just so exciting to see all these things being built on it's this. I guess it's a social layer, but it's just the brand. It's fantastic.
Yeah, and like, I guess, like, the whole summary, the reason I want to bring this up is I think, and I continue to push this idea of, people will want to be in Bitcoin because it's cool. We've struggled with this as Bitcoiners for a while. It's like, how do we make Bitcoin sexy? It's a bunch of numbers and old boomers and all this stuff. And it's just so financy. But you start to turn heads when you wear a Bitcoin shirt. You start to turn heads when you have a collection of Bitcoin trading cards, when you have stuffies, when you have Bitcoin on your bra, and all these things.
Stuffies,
and those are the conversations I'm so looking forward to whenever the moment arises. It's just like, are you drinking like a Bitcoin energy drink? And I'll be like, yeah, in every can you get some Bitcoin. And those, they seem subtle. They don't seem like really important call to actions, but eventually someone seeing a Bitcoin energy drink will be their first exposure to what Bitcoin is.
All these things are touch points, right?
When they talk about how they got into Bitcoin 5 years from now, they'll be like, yeah, I saw some guy with Bitcoin on an energy drink. And
I tried this energy drink, and I liked the energy drink, and I was able to redeem a little bit for some Bitcoin, and that's how I got into it. Or I played a Tetris game that was based on Bitcoin, and that's how I got in.
And I learned about the world's hardest money, right? And I like those stories. I like those stories so much more than, yeah, my entire family's net worth got eviscerated by hyperinflation and I found Bitcoin. Like those are inspiring. Those are nice use cases for Bitcoin. But I hope it expands beyond we always find Bitcoin out of fear or greed, and we just find it because
Well,
of
it
the
will.
cultural sensation
We
of it.
will. Because it is. That's what's happening.
Hmm.
You know, that is actually that is really what's happening. I know
Hmm.
we're kind of running on time here, but I really wanted to talk to you about Pacific Bitcoin and just kind of wanted to
Yeah.
give your, you know, what you thought about it, because that's how we met. Like we met at the Canadian Bitcoin conference.
Yeah. So I liked it. LA is always kind of it's a crazy place. Lots of traffic, lots of stuff going on there. But they had the whole event in this airplane hangar. I think they did the same thing last year. You know what? I didn't see a single speaker because I was hanging out and doing videos the whole time. So I would not be a good person to talk about the quality of the speakers and all that, but I heard it was pretty good.
How many people
Did
were
a lot
there?
of
Like less than a
Oh, I
thousand, or
felt it was around 1,500, maybe less. I'm
oh,
not
that's
sure.
quite a
That's
bit.
just what I heard though from talking to people that were there the previous year that it was about the same amount. So they didn't really gain a lot of new Bitcoiners. They didn't really lose people in the bear market. So that's a good sign.
Do you think we're going to
More
get to a
about
point where Pacific Bitcoin will overtake the Bitcoin conference in the spring, Bitcoin
No,
Magazine
not at
conference?
all. No, 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 I don't think so. I don't know. I didn't go to the Bitcoin conference this year, but 22 was insane.
Yes.
Like there was like the Miami convention. Did you go to that one?
No. No.
The Miami Convention Center is the size of a city. It is massive. It's daunting. It takes you an hour to walk from one end to the other. It's not the same thing. Like the hangar's big and it's nice and you can fit 1,500 people in there comfortably, but I mean, you could have like micro economies inside that Miami Convention Center. So I'm curious because this year they're going to be moving it to Nashville. I don't know what the venue is like there. I know that this year when they did the Bitcoin Miami or whatever, much smaller turnout than 2022 for obvious reasons. I think because they had pretty opportune timing. I think they were running off of the energy of the 21 Miami conference, which was, the El Salvador announcement, and everyone was expecting something
Yeah.
pretty big. And, you know, it was really big in 22. And I think 23, it was a lot more muted. So that one
And
I'm curious to
Pacific
see.
Bitcoin is a Bitcoin only conference, whereas the Bitcoin Miami
Yeah.
conferences are, you know, they might brand themselves as being a Bitcoin conference, but it's a lot of the broader industry, let's say.
Um, I didn't see. Yeah, you're right. I mean, when I went, there were booths for like Celsius and BlockFi and all that stuff, right? But they made it an effort to not promote shit coins. I know now they're doing ordinals and all that stuff. I saw this funny clip actually from BTC Amsterdam. One of the BTC magazine people asked on stage like how many people own ordinals, and in the whole crowd, it was like 8 hands went up. So you can interpret that as either want or oh we're early, right? So I don't know. I've always had this viewpoint on ordinals that like the barrier to entry and like the risk of losing them is so high just because it's just not ordinals is just not like a good protocol to have collectibles on. It's miserable if you don't know what you're doing, and there's no way to really simplify it because you kind of have to run your own node. So whatever. But yeah, from a conference standpoint, like I really did like Pacific Bitcoin, a lot of like good energy there. Um, I don't want to dive into it too much, but there's always drama with Swan somehow. Not going to dive into who said what, where, why, and how, but Swan is going to be an interesting thing to watch over the next few years.
Yeah.
I think the one thing I will commend them on is they've done an excellent job in focusing on media creation and content creation, and they've funded
Yeah.
some great creators and
They've
really
built a
good
great brand.
space.
They've
They
built a
built a
fantastic
really
brand.
they've built a great brand, but they like Corey and some of the stuff that comes out, it seems so self-destructive. Like there's just little things in terms of their interaction when it comes to criticism that's just like you can just destroy
Yes.
your brand super easily in Bitcoin by
Yes.
just messing with people's
Now,
trust. And
I would
so
argue that maybe they've spent a little bit too much time on on the media side and on the branding
just like
side.
get off Twitter. Just like
But
Corey, if
just
you're watching this, just like get
yeah,
off
yes,
Twitter.
but also like maybe if you build out on your infrastructure, on your back end infrastructure a little bit more,
Mhm.
instead of, you know, hiring people to do it and the custodial stuff. And if you built that in-house, spent your money building that stuff in-house, as opposed to building out your brand and hiring another influencer, Bitcoin influencer, to kind of talk, it might have been, maybe you'd have less criticism that way. I have nothing against Swan. Like I don't use their product. I'm not American, but I see
what
it
I'm
as
really interested to see is right now, like all the Bitcoin companies are sort of, they're competing with one another. Like even if you're a non-custodial exchange, you are competing with the custodial exchange because you're hoping that through education, people leave the custodial exchanges and come to you, right? And so there is this mechanism of competition. What I really wonder about is when an ETF gets approved, if no matter how much you sell this idea of not your keys, not your coins, if people are just not going to give a shit because BlackRock has your Bitcoin.
Well, people, it's not binary. I don't think it'll be a binary thing. I think you're going to get people that are going to buy into the ETF, and then that's going to be their touching point. You know, they'll put $1,000 in an ETF, and then, or whatever amount of money that is, and then they'll educate themselves from there. And then at some point, they're going to sell that ETF to buy spot and hold their own keys.
But what I wonder about is that, from what I understand, a lot of these like non-custodial, these like OTC buyers, this like, you know, Swan Private, Strike Private, all these like kind of private firms that work with high net worth individuals.
Yeah.
These are high net worth individuals that just want price exposure. Like they like the idea of Bitcoin and all the ethos of all that, but they're going in to buy $5-10 million worth. And I think if you give them the option to just have a QSIP that they can stick into their brokerage, they're going to probably say, I don't want to deal with all the custodial stuff. I just want to trust BlackRock. Maybe that's just my take. Maybe I'm wrong. Maybe all the high net worth individuals are getting fully educated on the importance of having, you know, self-custody. But my guess is they just want someone to manage their money. Usually if you have $10-15 million to throw in a Bitcoin on a whim, you're just trusting someone off the bat anyways. And that person, I think, is always going to want to sell them an ETF versus I'll manage your Bitcoin through one of these.
There's
like
more money to be made from it, right?
Going belly up. So I just see like a big lifeline for these companies is those high net worth individuals. Like if you take away the top 5% of volume from Swan, I think that company's underwater technically, you know, and you can, I don't want to like call people out, but I think it's like, you can look at this, the plebs are great. The sat stackers are awesome, but they are not the majority of revenue for most of these Bitcoin companies. It's always like the top percentile that drive all the revenue. And if they just say, we don't need to deal with spot anymore because of the ETF, then I don't know what happens to some of these companies. They're gonna have to really
I'm a little
change
bit
their
more
business
optimistic
models.
than you are. I think I agree. I completely agree. It's factual. What you're saying is not an opinion. Like that's truth. But I think we're still so early. And there's going to be more than one ETF. There's going to be several ETFs.
Oh, yeah.
And some of those ETFs I would suspect are going to fail. They're not all going to make it.
Well,
do you think they're all going to make it?
Fail? What do you mean by fail?
Like they're going to get rugged. I think they're going to succumb to fiat incentive. Just take a look at what's going on. What you know, the FTX situation and what may or may not be happening in Binance. Like there's a lot of fiat incentive.
I would say on that note that when all these spot ETFs get approved, they are not going to be dealing with any custodian that's not super vetted. And I could be wrong. These things could be a rug pull at the end. But look at look at
history, right? With Celsius, Celsius, BlockFi.
Yeah, but none of the regulated products have been affected by any of that stuff, right? The regulated Bitcoin ETFs were not putting their Bitcoin into, you know, random yielding accounts. They have all this stuff locked up, right?
We shall see. Like we shall see.
We shall see.
I would assume that you're right. A lot of people are going to buy the ETF, the ETF when it comes out, and yeah, it might be high net worth people getting exposure, but out of that, you're going to get people that are going to educate themselves as they see things kind of happening around them, right? More and more people getting their bank accounts frozen. And people get their bank accounts frozen. And even if you're not one of the people that got frozen, you see that. And then you see like, oh, Bitcoin still worked. And then you say to yourself, well, I got this ETF. Wait a minute. That would still get frozen. How can what do I need to do to go from there to there? And it might not be all of it. They might
I think what I'm talking about is more of like a very short-term, medium-term mindset. I think all the things you say are probably going to happen. We're going to get more rug pulls and all this stuff. But I think in the immediate term, a lot of these companies, and they aren't public, so they don't have to disclose their finances, but I have like a little bit of inside baseball on this. A lot of them are hanging on by a thread thanks
For
to
sure.
these big
For
high net
sure.
worth individuals that
For
are
sure. For
stacking
sure.
sats like Sailor, keeping the thing alive. Like, 1,000 plebs doesn't make up for the one guy doing 100,000 per month Bitcoin buy. And if
And
one
for
of those clients leaves or a handful decides to go for the ETF, there's an existential crisis on the hands of a lot of these smaller Bitcoin companies. That's all.
and then there's debt on top of it too. Debt is becoming, as we talked about an hour ago, debt is becoming more and more. It's expensive now. Borrowing money is more and
Yeah.
more expensive, and there's not a lot of VC funding out there. First of all, it's always been hard for Bitcoin companies to get VC funding, but
Impossible.
it must be
Brutal.
even harder right now, right? So it's hard to get VC funding because money is expensive. Borrowing money is more and more expensive. Yeah, like the longer this bear market goes on, I think we are going to lose more and more of these companies, sadly. But the ones that make it out are going to be strong.
Always. Yeah. Yeah. The ones that make it out on the other end are always like they
And
crush
guys,
the next bull market.
if any of your sats are on an exchange, get them off an exchange. Okay, like the
Get them off.
PSA, like get your sats
Get
off
them
the
off.
exchange, and then it doesn't really matter if who goes out of business. If your sats are secure, if you control your own keys, doesn't really matter. You'll buy your sats, buy your Bitcoin, your next purchase from a different exchange. If somebody goes out of business, get your sats off the exchange.
Yeah, that's the lesson, and that's what I should push for more than anything. Don't trust the BlackRock ETF. I just know a lot of people will.
Don't trust anybody.
Don't. You don't have to. You don't need the trust. The trust is it's a feature.
Be your own bank.
It's a requirement. Exactly. All right. Okay. Last thing, and we'll wrap it up. FTX stuff. I just like, it's not that these are, life-changing, explosive, revelatory things coming out of the FTX trial, but I like to follow it. It's a little bit interesting. It's just funny. It's just like a lighter way to kind of end
Man, those drawings, those like artist renditions of Carolyn Ellison,
brutal. Caroline,
brutal. Like, wow, they were.
Did you see the thing? Did you see the thing I posted? Caroline Ellison was on Arthur, like the old cartoon show. There's like a clip of her when she's like 9 to 11, and I like quoted it. She's like talking about like the Hitchhiker's Guide to the Galaxy as being like one of her favorite stories. She's like a 9-year-old, and I was saying like FTX creditors going to get royalties from this.
It's so odd. Like that whole case, I half follow it. It's not really a Bitcoin story, so I don't really care. Like I don't have that much capacity for stuff that's
it is a little bit of a Bitcoin story. Did you hear?
A little bit.
Did you hear that?
Yeah.
Here, one of the things that came out is that when Bitcoin broke under 20K, to shore up capital to pay back some of these lenders like Genesis, SBF was selling clients as Bitcoin, and he was saying if it hits 20K, sell it. And that's how they were paying back some of these loans that were called from them around the time of the collapse. So there you go. Not your keys, not your coins. And not only will people steal them, your coins, but they'll sell them for you to pay back their fiat loans. So that's one revelation that came out of this.
Absolutely brutal.
Another one was SBF claimed he had reached out to someone from Trump's staff, and he was trying to figure out how to bribe him to not run for the election. And he was contemplating paying Trump $5 billion to sit out the 2024 presidential election, which, like, I mean, it's just a thought that he had. But
this story is insane. This story is insane. Like the stuff that we're reading, the stuff that's out there in the media, and the stuff that's not. Can you imagine like the behind the scenes stuff? How insane that this whole story is. Like this is crazy.
It's wild.
It's wild. And who knows where it begins and ends. And honestly, I got to toot my own horn here. I saw this coming a mile away. I saw this, like, even this was like a couple of years ago. The first time I saw this guy speak, I'm like, who is trusting this guy with their money? Like, I'm like, no, like, absolutely not. Like, there's something fishy going on here. I don't know what it is, but this guy is. I got the same vibe from a Vitalik, like with the Ethereum stuff, right? Like who's trusting these people with their money?
Well, you know what? You bring up Vitalik. That's a really good point. I think Vitalik set the standard for this, right? This like very socially awkward, wearing like weird t-shirt thing. That was the first time I saw it, because some people say, oh, you know, Zuckerberg was like that too. No, Zuckerberg was never as
No,
awkward as
Zuckerberg's a little
Vitalik
bit
ever
different.
was.
Yeah.
But I think the Vitalik and the success on a price perspective of Ethereum, it gave all the investors that were involved in that the confidence to say, oh, SBF, he's a weird guy, but hey, look at the last weird guy
He
that
looks
did this for
like
us, right?
what someone would think a genius is.
Yeah, exactly. He was
Right?
LARPing,
He
right?
doesn't look like a genius, but he looks like what someone who's might think what a genius looks like.
Well, and then he had all the credentials, right?
Weird.
Like the parents that were teaching at Harvard, working at Jane Street, all that stuff, all right? And that was, you know, that's what I fell into. Like I got sucked into that. Oh, this guy has like a pretty solid background. It seems auditable enough. This guy didn't come out of nowhere, but I mean, he actually did come out of nowhere. No one actually knows, you know, how he made all the money he made at Jane Street, you know, this whole Bitcoin arbitrage thing. Speaking of which, this came out in a case too. So a billion, I don't have the article here. So $1 billion of crypto, because the Alameda people, they love these arbitrage trades where they just like trade overseas, they get a premium, they flip it back. They had $1 billion of crypto stuck in Chinese exchanges. And so in order to get it out, they bribed Chinese officials to basically free it. And I think that might be the most egregious thing to actually come out of this trial, because it wasn't super clear before this, but that is a crime that like there really is no defense for, like bribing foreign officials. I think he's in for life, honestly. Sam Bankman-Fried. I would be really shocked at this point with all the stuff that's come out and all the people testifying against him if he's not locked up for life. I think the people cooperating, like Caroline and Gary Wang and all those guys, I think they will probably have shorter sentences because of all the cooperation, but there is no way that this guy is not locked up for life. There's no amount of
Sounds pretty
cooperation.
damning. Like I
It's pretty
obviously
damning.
I don't follow all of it, but just some of the stuff
And
I'm reading.
everyone was saying like, oh, like the next leg down for crypto is going to happen this month because SBF is going to pull some wild cards about how he knew about Binance insider trading. And we'll see. He has to kind of get up on the witness stand and testify about himself over the next few days. And maybe he has something in his pocket, but I really don't think so. But so get this. So $1 billion were locked in Chinese crypto funds. He bribes Chinese officials. They don't take that. And then he organizes a scheme with Thai prostitutes to sign up for the exchange and organize trading strategies so that they could somehow funnel the money out of there through, I guess, like different crypto withdrawals under different names. Doesn't work, but just brutal. And then what was the next thing here? Oh yeah, and then his CTO testified saying that he gave Alameda privileges to have a negative balance on FTX, which we knew, but hard coded the ability for him to borrow up to a $65 billion line of credit against customer funds. And it's wild. Like they're going through all of the people that were involved with Alameda, every asset that he sold, every you know, political contribution that he gave. There are still going to be crypto. If you ever lent money to this guy and he paid the loan back, that loan is going to get clawed back from you at this point. That's how like deep the rot goes. And then the last thing on this list, I don't want to go too long, but you know, they had this $100 million insurance fund, and it turns out if you actually went into the code on the back end, they the way they created the number that represented the insurance fund that they had, there was no insurance fund. They took the daily trading volume, they multiplied it by a random number around 7,500, and they divided it by 1 billion. So even this whole like proof of reserves thing doesn't really amount to anything when exchanges are saying like, oh, we're going to have proof of reserves and all that, because it's just like, you don't know what's going on in the back end. You know, you have some wallets, but you know, we all know that you can't trace every wallet. So yeah, anyways, just
get your Bitcoin
wild.
off the exchanges and you don't have to worry about all this stuff.
Get your fiat off the exchanges. That was my mistake. So I got rugged by FTX, but I didn't have any Bitcoin on there. I just had fiat because I was just trading fiat. The fiat is fake too on there. So
like from what I understand, the trading platform was actually quite good, right? Like from a
that's the big problem.
That's
and this is, we were talking about this before the show. This is like Michael Lewis. He writes this whole book on SBF. He comes to the conclusion that, oh, if there was no bank run, the business would still be running today. because the product was so good, you know. And there's a bit of truth to that in the sense that, like, yeah, it was easy to execute, but the product being good has nothing to. It doesn't matter if all the numbers are fake. I mean, that's just like having a paper trading platform that works really fast, right? Like if there's no actual execution going on, or it's just executing fake numbers, like that doesn't mean that it's good.
Sadly, this
You're
is not
trading
going to
against
be it,
fake
guys.
dollars.
Sadly, there are going to be more rug pulls like this. You know,
Mm.
you know, like they're look at what's Binance. Like, are you following the BNB? That looks like they're supporting BNB at around 205.
Oh yeah, that's like, and that's like they own 75% of the supply. It's just like FTT. There's no reason that thing should be at $200. I was shorting it for months actually, and then they were like, "Oh, we're pulling Binance out of Canada." So I was like, "Okay, well, I guess I can't even get rug pulled because they're making me pull all my funds off." So I'm out of the game.
Not
But yeah,
never
that thing's
financial.
going.
First of all, maybe I should have said this at the beginning. I'm not here to give financial advice. I'm not here to. This is for entertainment and educational
Yeah,
purposes only. That being said, guys, if you're going to trade, do your homework. You know,
yeah,
do your homework. Don't just think that you can just start trading and everything's going to be great. You're going to become a millionaire. Like, guys,
no.
be careful.
No, I don't encourage people to trade. I think it's just, you know, we're here because we have long time preferences. I think when you start holding a position for more than like a few months, you're not really trading it. Hopefully, you're looking at it as an investment. And I don't really recommend short-term trading for almost anything. Um, you know, because you just don't know. Like markets can get a lot more irrational than you can stay solvent. That's like the number one position. So you might be directionally right on something, but you can get destroyed trying to be directionally right on something.
And that's in the best of
So
times. And at the best of
that's the
times,
best of times. Yeah.
at the most stable of times, weird things can happen. You
Hmm.
know, I've been around the sun a couple of times, and
Yeah.
the way things are right now in the world, this is as weird as I can remember it. There might be, a couple of periods in my life that have been equally as weird. Not even like the past couple of years, there's nothing weirder than that. Things are odd right now, and I
Hmm.
think now until at least the American election is over, I expect things to be exceptionally weird. So for the next 13 months, markets could be exceptionally wild.
Yeah. Hug your parents, hug your children.
Touch
Um,
grass.
touch grass, get sunlight. Hard if you're up north in the next couple of months. It's going to be pretty rainy and snowy for a bit. Um, but yeah, like we talk about markets, we talk about finance, we talk about Bitcoin. It's negative headlines sometimes, it's positive headlines other times, but I do this show and you join me on this show, and I really appreciate you joining me on this show. I do it primarily to try and get a handle on what's going on. And I've said this, and I had this great podcast the other day that like um, this guy was telling me, oh, I started this podcast talking to people about Bitcoin, talking about their origin stories, because it was a form of therapy for me to make sure that I wasn't crazy, that there were other people that were
Yeah.
finding Bitcoin and finding truth in Bitcoin and having it change their life. And it wasn't just me in this weird, you know, moment of time where I got super into this random magic internet money. And it's the same thing with this live show. Like maybe I'll turn it into something amazing one day. But for me, it is therapy to talk about all the things that kind of gestate in my head about the state of the world. And I'm not always going to be right about things. I'm not a news anchor. None of this is scripted. We take bullet points. But the idea is this is a little session for all of us to kind of
Yes.
take in the crazy world, filter it a little bit through this longer time preference lens, and hopefully come to some nice conclusions about things and be open to being wrong and all that stuff. Right. So, yeah.
The same. And I host a meetup in Ottawa. So if you're in Ottawa, please check us out at Capital Bitcoiners on Twitter for the same. And that's the reason why I'm here. Like I just like talking to other Bitcoiners, and Julian's great, and it's good to be out and just to discuss things. And even today, like we argue, I don't know, but like a lot of the stuff we talked about, we didn't have the same opinion on most of that stuff. We had different opinions on
Yeah.
most of the stuff, and I think that's great. And I
That's
hope
awesome.
people kind of stumbling upon these videos or wherever you are in time, if you're watching this 5 years in the future and you're just somewhere on your Bitcoin journey, or you're just wanting to learn a little bit about finance or about trading or about whatever, I think that's amazing. And I think we need to, we talked earlier about the social layer of Bitcoin, but yeah, I think we got to build out social layers of everything right now. More social layers is good.
Yeah, hold your family and hold your Bitcoiners tight. I'll end on that note. Awesome. Thanks so much for tuning in, everyone. Thanks so much, Boomer, for helping me out again. We'll be back
Anytime.
next week. So I got a big trip coming up in November, traveling down to El Salvador and all that. But we'll get a couple shows done before then. And yeah, we'll see what next week brings. Enjoy your weekend, everyone. If you want to catch me in another few minutes, I will be on the BTC Sessions channel. Why Are We Bullish? So yeah, take care.